So the gap between Trump and Clinton had narrowed 51 days until the election, but at the moment Clinton surged up. Now Trump hasn't gone down, so his polls are pretty good, near 45, 44, 45, higher than he was when the gap was very small. But Clinton has jumped from 45 to nearly 78. Actually, he has 78, past 78. So that's where the move has occurred. But what I wanted to do here was look at history. So this has the previous 3 elections as well. Firstly, in each of these, the person who was in the lead with 35 days to go won. Obama was ahead of Romney, and he won. Obama was ahead of McCain, and he won. Bush was ahead of Kerry, and he won. So that's a pretty strong, I don't need sophisticated fancy stuff. That's convincing enough for me. At the same time, I'm going to look at last year, or last election. Now, if I go back about 35 days, okay, this is 40, but Obama had a good lead. He was up above 48, and Romney was, 45? But as the election got closer, this gap collapsed. So with 30 days to go, with 20 days to go, it's flip-flopping. The gap's far narrower than it was, about 40 days, 35, that kind of time. Yeah, this is 35. And you can see the gap's a lot bigger. So, basically what I'm saying is that from my perspective, looking at how that plays out on the betting markets, I can just flip over to Betfair or whatever betting system, and you can see that Clinton's down to 1.36. So this is very high. Actually, I'm looking for bets. If it does go to 1.35, I think I'll have some of that. Because that's pricing in to perfection. That's nearly assuming that she's won, that there's no risk. So I'm not having to pay much to take bets on Clinton, because there are loads of people out there who are convinced, totally confident that Clinton's won. So they don't even look at the risk and the price. They just go, oh, that's easy money. So the idea here is, if I lose a small amount. But if I win far more. So that's why there's opportunity from a trading betting perspective that makes it still interesting / attractive. So back to this page, and again, the links will be in the description below the video. But you can also, so this is what happened last time. If this happens again, then I'll do well with my bets, because if suddenly the poles narrow, the gap narrows and it's within error, if it's unclear, we don't really know what's going to happen. And basically, like the previous video, since the poles are quite related to the stock market, if the markets go down, then the poles will narrow. And if the poles narrow, the odds will change. So at the moment, the betting markets have 70%-ish. I mean, a very high probability that Clinton's going to win. But if the polls narrow, then suddenly the odds will go up. And I can trade that, and it's happy days. On the other hand, it doesn't always have to be that way. So if you look at 2008, Obama versus McCain, well, 35 days before the election, Obama was in the lead. But what happened then is that the lead just grew and grew and grew. So instead of, narrowing until they were within error, like in the Obama-Romney case, here we never got you wouldn't get a trading opportunity. The odds of Clinton would go to from 1.36 to 1.3 to 1.25 to 1.2, 1.15, that it would just run away from you or me. So there's no such thing as a free lunch. In the Kerry versus Bush case, again we had, so Kerry was in the lead. Oh no, sorry. Bush was in the lead, and the lead did narrow. I mean, so with 25 days to go, this kind of period, the gap was far narrower than it was 35 days ago. So this would have been an opportunity to trade. And on the final day, the gap was narrower. But not, it didn't close and interchange as they did in the Obama-Romney case. So that's just a review of a couple of recent previous elections. And my hope is that it's more like the previous Obama-Romney election, so that in the coming month we see the gap narrow and become more like this, where they're within touching distance, so that I end up getting odds like 2.0, so that it's closer to 50-50, and then I can trade out.